Hey traders, it's Danielle and welcome to today's Tuesday trade example. So today I want to talk about CHGG. This is a company in which I hold stock. I think that the long-term potentials of the stock are pretty solid. I also like the fact that the company has innovated over time, and in particular, they've been doing really well due to COVID because they have a lot of options on their website. Here, I can just go ahead and pull it up for you right here. But they have a lot of different options on their website that basically helps with what's going on in the world right now. So, you have flashcards, tutoring, writing help, internships, basically just online educational resources. So when this company first came out, what they did was they rented textbooks. And back when I was in college, actually, I rented my textbooks from them and then would send them back because, well, textbooks are expensive. But over time, they have added just a whole bunch of different solutions. And then due to the pandemic, as you can see, they really just started skyrocketing higher. They were trading at a low at one point down here at about $28, and currently we're trading about $105 a share. So, safe to say there's been some pretty big movement here. Now, I want to trade it on earnings for that reason, but I'm going to go over a couple other reasons I wanted to trade it as well. I pulled it up in my new tool, the Run into Earnings tool, and I could quickly see out of 12 quarters that they beat estimates 12 times. Now, as you know, with companies that are reporting earnings, just because they beat, it doesn't necessarily mean they traded higher. So down here, you can also see, okay, well, how often did they either trade higher or lower, and by what dollar and what percent? So as you can see right here, out of the quarters analyzed, you've got 2 quarters where they actually traded lower, 3 quarters actually, so, 2 of those had to have been instances where they beat and still traded lower. But the majority of the time, they actually do trade higher on earnings. Now, when you're looking at this, obviously you can look at it from a probabilistic standpoint and say, all right, well, if they usually beat earnings, 11 out of 12 times, makes sense to be bullish, right? Well, you know what else is really interesting about this is when they beat earnings, they also, a pretty high probability of the time, half of the time, they have more than a 5% up move after their earnings report. So that's pretty significant. And so when I went into this earnings trade, which came about right about here, we were trading just below the previous all-time highs. Okay, now this is a stock that I would consider to be pretty bullish on, just because of all these factors aligning. Now there was one more thing that added to my analysis. So for those of you who don't know, I've been using a really awesome tool that collects and analyzes social data, and it kind of gives you a heads up as far as what is going to happen on these earnings reports, because an earnings report is a result of what happened over the last 90 days. How do you know what happened? Well, usually they tell you on the earnings report, but guess what happens before the earnings report? You have people talking about the company, saying if they like it, saying if they're using it, saying if they hate it, and we can actually track that data, and Likefolio does that for us. So when I pull up CHGG in my overall Likefolio dashboard, they track the consumer purchase intent mentions. That just basically means, are people going to use this product? Are they mentioning that they're going to use it? And we can see that, it's been a little shaky, but it's been up and down, higher highs, higher lows, consistent and strong trend. So that tells me that over time, customers are continuing to use this product. They're continuing to like the product. And for that reason, it gives me another point of confluence on my overall earnings trade. And so for that reason, I decided I wanted to be a little bit more aggressive. Now, in this instance, what I did was, remember, at the time of earnings, I put on the trades right before the report. It was trading just below the previous all-time high. There is also a little bit of short interest in this as well. I put on my fib extensions because that's what I like to use to identify targets. And I got a target up at 113.66. Now, that's very close to $115, and when I'm using an upside target, I always want to use a round number, especially if it has high open interest. So what I ended up doing was I placed a butterfly in the week after earnings. Now with CHGG, because they only have monthly options, that was the only choice that I had, but I would have done it even if they did have weekly options in the series after earnings, because as you could see from my run into earnings indicator, CHGG, a high percentage of the time, trades higher more than 5% after reports. So we're just looking at statistics here. Now, I decided to set up my butterfly, a 105, 115, 125 butterfly, and I only paid $1.70 for it, okay? Pretty good, cheap trade, low risk, high reward. With a butterfly like this, it's $10 wide, so really the max you could get is about a 5x. Now, because I ended up taking off this trade 7 days prior to the expiration, I was not able to get the 100% profit, but you know what? In butterflies, I really like to target the 50 to 200% range because those are going to be your regular winners. It is going to be amazing when you get your butterfly to be at the center strike, on the exact day of expiration. That's what we like to call a perfect pin. But we don't need that to happen to make money on the trade. What we need is for the price of the stock to be as close as we can to that center strike within about a week of expiration. And in doing that, you can get a 189% winner. So that is a trade that I wanted to show you. I discussed this trade in my webinar on February 18th. Yeah, I had to look at the date there for a second. I've been stuck in this Texas snowstorm for what seems like forever. But anyways, I discussed this trade in my webinar on February 18th with Landon Swan of Likefolio. Talked about, just a lot more detail on how I use this social data and combine it with the statistics and probabilities that I'm using to make actionable trades. So if you want to learn more about that, make sure you check out the replay to the webinar. You can find that at simplertrading.com/wave, WAVE -replay. I'm also going to link it below this video. So thank you so much for watching. I hope you learned a little tidbit or two, and I will see you in the next one.